So today is January 14th, 2015, and there is an interesting inflection point going on with gold that we wanted to make you aware of. So let's take a look at the gold index. This is the ETF, the Spider Gold Trust. It's a weekly chart that we're looking at here, and you can see that we've had a huge decline on some major volume, especially back in the 2013 period of time, where it just declined very quickly after a huge spike up during the just right after the recession. Anyway, so you could see it kind of trading in a little range, still trying to go lower, but now what's happened is all the sellers seem to have come out of it. You can see the Genius indicator is starting to rise. It's coming up through the zero line, which is our first indicator that gold could be on the rise. Now, doesn't necessarily mean it is, but it's step number one in us establishing an uptrend. Step number two is going to be once we get a golden cross, the 40-week comes up, or the 10-week comes up and crosses through the 40-week moving average. So the red line here comes up and crosses through the gray line. You're seeing some increased volume, but not much. I'm not a big believer that this is really the first move and the main move of gold. I think what's going to happen is it's going to come up here. It's going to test that 40-week moving average. If it does it on huge volume and punches through that, great. We've got an uptrend that's going to be getting put in place. But it may easily bounce back off that, because you can see in this period of time here, you can see that there's a consolidation, right? And so that consolidation needs to butt up against the top of that and blow through this area on huge volume, and then we have a nice uptrend in place. And with all the commodities getting tanked, oil and copper and all the other commodities, gold has been performing relatively well compared to them. However, gold is still a commodity. It's a little bit different because people use it as cash and jewelry and things like that. You don't do that with copper so much. And so taking a look at the way gold acts is great, because it gives us that there's a relative value from gold to other commodities. Nonetheless, it is a commodity, and it will probably perform fairly close to in line with other commodities over time. So if you think oil is going to bounce, you think copper is going to bounce, and we don't, we think we're in a long-term deflationary bear market on commodities, then gold is a play. So what does all that mean? I kind of muddied the waters for you, but the bottom line is we're looking at gold as an uptrending item, and people are going to flee to gold if the euro crashes, if the dollar crashes, and the dollar's in a downtrend right now. If interest rates start to go up, you'll see gold starting to go up. So things are kind of shaping up for gold to be making a bottom here. It's not in place yet, but we wanted to at least make you aware that gold is probably going to be a trade here in the second quarter of the year, maybe a little bit earlier if we can get everything to cooperate. But right now, when this market is tanking, gold seems to be wanting to go a little bit higher. So we wanted to make you aware of that.